Hello traders, and thanks for tuning in to this week's Market Outlook from Access. I'm Michael Stark, Financial Content Leader at Access, and in this video we're going to be looking at a potential idea for a trade over the next few days, some of the narratives driving the possible movement and what traders who were to take the position would need to be aware of. But before that, let's look back at how last week's idea did, which was a potential buy for IBM from the area of around 172 with a target around $195 to $200. The idea was fully accurate, with the price moving up to around 197 in the aftermath of better than expected earnings. So well done if you managed to make a profit on that one, but please remember that performance in the past does not guarantee results in the future. Now, for this week's idea, joining me to give the idea is Andreas Themistocleous, trading specialist. Thank you, Andreas, for being here.
Hello, Michael, and thanks for having me.
So what's the idea for this week? What are you looking at? What do you think might be moving?
Okay, so my attention for this week is on the pound-yen pair for a potential buy trade with a target around the 190 price area. The price is trading just above the 78.6% of the daily Fibonacci retracement level and the 20-day moving average, which is a strong support level from a technical analysis point of view. The stochastic oscillator has retraced from the extreme overbought levels and is now in neutral area, indicating that the price has the potential to move to either direction in the near short term. The 50 and the 100-day moving averages have recently crossed, but this might not be a reliable signal because of the recent volatile movements on the chart, so it is possible to see another cross in the coming sessions. The Bollinger Bands have also expanded, indicating that volatility in the market for the Forex pair is fueled up, mostly because of low trading volumes related to the dollar.
And what do you think are the most important narratives that might drive the move up by pound yen?
The major factor that is affecting the pair is the image of the two countries' bonds. If we take a look at what is happening, we can see that the yields of the 10-year bonds of Japan are pushed down, while the UK gilt yields are relatively more stable. What this means is that if the 10-year yields of Japan continue to move down, then the pound-yen pair might break the range as we shown previously on the chart. The pound-yen is a momentum instrument and therefore it tends to sustain trends that are created, so the breakout to the upside might be the dominant scenario. Also, Japanese inflation is ticked down, so that might also cause some pressure on the Japanese yields and again boosting the price of the Forex pair to the upside.
And what are some of the most important events and news coming up that traders who were to take the position would want to monitor?
So in terms of economic data for this week, we have the Federal Reserve announcing their interest rate policy on Wednesday, where investors will be focusing on the comments of the chairman, Jerome Powell, and also the Bank of England releasing their decision on interest rates on Thursday. Both of these publications are expected to hold their interest rates at the current levels of 5.5 and 5.25% respectively, but any surprise apart from the expectations would most probably create extreme volatility for either of these currencies.
Okay, thank you very much, Andreas, for the idea. And in summary, the potential idea for a trade this week is a buy for pound yen with a possible target around 190. Primary narratives that could be driving the move upward by pound yen are bonds in Japan and the UK, with the yields going down in Japan and also declining inflation in Japan. And the most important information on the economic calendar this week are the meetings of the Bank of England and the Federal Reserve on Thursday and Wednesday respectively. Please remember, this is just an idea for a trade. Stock signals, not a guarantee of success. Always do your own research and manage risk.